Hello everyone, welcome to the Think Big Series brought to you by PSG. My name is Greg Hopkins and I'm the Chief Investment Officer of PSG Asset Management. For those of you who don't know us, PSG is a leading financial advisory business. We pride ourselves on offering a big picture approach to helping you solve your financial needs. The Think Big Series is a collection of discussions with some of South Africa's leading thought leaders and hosted by award-winning journalist Bruce Whitfield. In these series, we tackle some of the big questions which we know are top of mind for you and which will hopefully help you navigate the very difficult environment that we're finding ourselves in at the moment. In today's webinar, Bruce talks to Estienne de Klerk. Now, Estienne is the CEO of Growthpoint Properties South Africa, which is part of Growthpoint Properties listed group, which is the largest property group in South Africa with a market capitalization around 40 billion rand. He was also the chairman of the South African REIT Association. Now you're going to be hearing the word REIT being mentioned a few times in the webinar. REIT stands for Real Estate Investment Trust, but it simply refers to a company that owns income producing properties. Estienne was also past president of the South African Properties Owners Association. Estienne has spent 25 years in the banking and property industries. And if you want to be talking about property around the braai on a Saturday evening, Estienne is the guy that you actually want to be inviting. Today, he'll be talking to Bruce about the future of the commercial property in markets in South Africa and abroad. Our campaign social media is hashtag ThinkBigPSG. The series is free, it's shareable, and it's open to anyone. Bruce, of course, needs no introduction from me. Bruce Whitfield, over to you.
Greg, thank you very much. Estienne, I love the way Greg so optimistically refers to REITs as being companies that invest in income-generating assets. I mean, that used to be the case in the olden days, 6 months ago, because those incomes have collapsed in a heap, haven't they?
Bruce, yes. Look, I think every sector has its cycles. The reality is that the REIT dispensation that was granted by National Treasury was specific for real estate because it is the largest investment class globally. I think there's something like $257 trillion worth of investment, $1 billion of investment into real estate globally. And it's just the weakness of the rand. It might be in rands, 257 trillion, you know. The rand's down 30% over the past 5 years, so it's certainly had an impact. Are the properties income generating? Yes, they are. Commercial property has clearly had a very, very difficult time over the last couple of months. We haven't been able to sidestep the COVID issues. And certainly in the retail space, that's where the tacky at the tar and many of our clients effectively went on a rental strike, so to speak. But I think we've dealt with those. As you are aware, the property industry managed to pull together in what we call the property industry group, which included shopping center owners that were private, some of the institutions, so effectively all the big property owners, and we managed to put out guidelines for relief and discounts for tenants.
Let's talk about some of the specifics in just a little bit. Explain to me, please, the ecosystem and the way it is supposed to work. You've got tenants, you've got landlords, you've got asset managers, you've got pensioners, for argument's sake, people who have got retirement savings. And for years, the property industry could do no wrong. Interest rates were relatively low. Property companies were highly geared. They bought some assets. They spent billions on making the assets glorious. They got lots of tenants in, and things were buzzing along very nicely. You had to have property as a very key component of an investment portfolio, particularly as you got older and in retirement, the income was secure. It was great. That ecosystem, though, I don't think it's fallen apart, but if you've ever had a loose wheel nut on a car and you start feeling the car juddering at 120 k's an hour, it feels a bit like that right now.
Yes, Bruce, so maybe let's just start at the beginning. So everybody works for a living, and then we obviously save for retirement or for a rainy day or to create wealth. And that money typically flows into pension funds and investment funds. And ultimately, those investment managers invest in various ways. Now, that can be a long debate. We'll get to that later. And that money then is looking for returns, right? That could be via income return in forms of dividends or distributions from REITs specifically, or it can be in the form of capital growth. Now, that money then gets invested, whether it's in industrial companies, but the REIT sector is the public real estate sector for real estate exposure. And that actually is a separate asset class and has become so over the past 10 years, where real estate globally now gets separately from the financial services sector and also separately analyzed and researched, so to speak. That those investments are then made into various companies. It could be, there's a 34 odd REITs listed on the Johannesburg Stock Exchange. And at the peak of the market, I think the market capitalization was around about 600 billion. Currently, that's about 45% down. So it's just over 350 billion today. So you can see that in the past, literally 3-4 months, the sector's taken huge pain. And the idea is, and how the REITs are structured, is they provide flow through. So you're effectively earning net rental after expenses. So the first component is, as you pointed out, equity providers, and that's this pension money, this savings money that finds its way into the property sector. The second component that REITs receive their capital from are debt providers. Now, there's a whole range of those, but primarily you're talking about the banks directly. So you'd get mortgage finance or unsecured finance from the big 5-6 banks in the country. And then we also receive capital out of the bond market. So that's the institutional bond market. Companies obtain a rating to say what their ability is to pay their debt. And that normally gets provided by Moody's or one of these kind of rating agencies. Fitch, S&P is another one. And they'll say, look, this company is really good, solid credit. And in fact, a Growthpoint, for instance, had a AAA rating from a credit perspective, which made it one of the top 3 credit ratings in the country not so long ago. So this is, let's say, 4 or 5 months ago. And they then we can then issue notes as companies into the institutional market, and pension fund investors then buy these debt notes, and they get a coupon, which is the interest, which is the return they get on these notes. So that's how the capital kind of structure works. Then if we look at the structure of the actual business now, often property gets misbranded as passive income. In fact, the receiver of revenue is a favorite to misbrand this industry as passive income, but I can promise you it's very far from it. Real estate's actually an incredibly complex industry. And
that's been exposed. I mean, I think that's been exposed precisely. It's a good point, just to interrupt slightly there. It's not passive. It's a very active industry. And because it's been so benign, that certainly from the outside, it's appeared like the swan that swims across the pond. On the surface, there's absolutely not a feather being ruffled, but underneath, the swan is paddling like a swan. And it works very hard, and there's a very clear mechanism. But you set an Alsatian on the side of the pond, and the Alsatian jumps into the water, and the swan begins to panic. And that's been what's happened in the property sector in South Africa. Certainly around the world, we've seen massive disruption in the property sector. So bad, for example, that even Intu in the United Kingdom has had to go into administration. And we see some of these heavily geared property businesses seriously see the wheels come off. They were in trouble before the crisis, but this crisis has, as Warren Buffett has put it so many times, exposed who's been swimming naked.
Yeah, look, I think it's a little bit more complex than many obviously give it credit for. But if you think about what in fact is, why has it happened? I mean, what has happened in real estate that has changed things over the past 6 months, say, and seen companies like Intu, overnight go into liquidation? I think the first thing is that, it doesn't matter who the company is. If you don't get income for a couple of months, then your balance sheet certainly will be tested. And in the real estate environment, obviously the provision, because these REITs pay out all their profit on a 6-monthly basis to investors, they don't retain huge quantities of capital. And the model in this environment has obviously been tested somewhat, and I think it will certainly lead to some introspection, certainly from an SA REIT perspective. You know, we will be discussing this internally and seeing whether we can approach National Treasury maybe for some tweaks to the legislation to maybe change this in the future. But the bottom line is if you're only getting money from your shareholders and you're only getting money from debt providers, if you do have debt on your balance sheet, and even if you conservatively geared, if the rental doesn't come through the door and property values start coming down by big multiples, then any balance sheet starts looking pretty ordinary. And the UK is a little bit specific, so that situation hasn't played out in South Africa at all. And I think the situation, albeit if you look at the sort of trading position of all the REITs on the South African Stock Exchange, it certainly isn't the same reason as what we've seen in the UK. Now, Intu is quite specific. I think over a couple of years, there have been concerns around the level of their debt. And I think the UK government has played a massive role in what's happened in real estate, specifically retail real estate in the UK. So if you protect tenants, okay, over contractual law, then all of a sudden, the landlord is totally helpless. And if your tenants aren't that ethical, then you do find that there are huge challenges coming. So what's happened there is the UK government, as part of their regulations, have said, look, even if your tenants don't pay, you can't cancel their agreements and put them out of the property. So all the UK retailers, or many of them, have used that opportunity and have in fact stopped paying rental. Now, as I pointed out earlier, if you don't get your income, it doesn't matter how good your balance sheet looks, you're going to be in trouble. And that was sort of...
Give me a sense of South Africa. Do you think your tenants have behaved ethically? We saw effectively several of them declare force majeure, saying we are not paying. There is no footfall. We have no income. And if we have no income, you have no income. It's the virtuous cycle of a death spiral, I suppose.
Yeah. So I think there were two stages, maybe, Bruce, to this answer in terms of, whether there's ethics or not. I think the first position is that, if your business is closed down, and, this would probably constitute the closest thing we've seen to a force majeure, as an industry ever, certainly in my career. And I think the tenants obviously, took a position that they would like to consider their position. I think where I maybe differ from the approach that was taken is many of them went public to say, look, we're not going to pay rental. And I believe that, if you're in a relationship with a partner and something goes wrong, it doesn't matter what that is, the first guy you should be phoning is your partner. You shouldn't be going to the media and saying to everybody, look, we're not going to pay rental, and then immediately stop paying everybody. I think what we have done right and what we've done better in South Africa than anywhere else in the world is most of the places in the world, the UK, Australia, the US, all these big markets, they effectively at war with their clients, being the real estate industry, because of this issue. What we did correctly here is we basically came together as a property industry. We agreed to share the pain, if you'd like, with the retailers. And as we sit here today, with most of these retailers, we have concluded transactions today and life is moving on. So yes, lots of blood was let, if you'd like, and we took a lot of pain. I would estimate the industry, as the real estate industry, probably lost in the region of between 6 to 8 billion rand. It's obviously very difficult because it's a very proliferated, large industry, and we don't have the statistics for everybody. But the numbers are absolutely massive.
You say that in the United States you've got tenants that are at war with the landlords. I don't know if you're aware of a looming war, but I was speaking to a guy called Ivor Blumenthal the other day. Ivor is the chairman of I must get this right, the South African Independent Tenants Association. So the little guys. You may have done deals with the big guys, with the Discoms and the Foschini groups and all of those guys, your massive anchor tenants. And those are, of course, your bread, butter, and whatever topping you want. But the little guys are feeling hard done by. I mean, I would Blumenthal using language like the property sector, mafia, and calling you all kinds of terrible names. I mean, they feel, the small guys feel like they've been cast under the bus here and been treated in the same way as the big guys have been treated. Is that a fair criticism?
I don't think it is fair at all. I would offer many of Mr. Blumenthal's members are probably the same guys that have been sending us letters of thanks as real estate companies, where, you know, restaurants and a lot of these very small tenants have been offered very, very generous terms over this period. I mean, to be honest, most restaurants aren't paying any rental at the moment, as government has effectively closed them down. You can imagine the damage in the tourism sector and everything around tourism. I would argue that our Minister of Tourism will be the first minister without portfolio soon if she carries on in the current vein. So, you know, our gyms, there's many corporates, and they small corporates that have been given, you know, a pretty good deal. Considering, and I mean, you know, I think other than the real estate industry, I don't think there's any other industry in this country that has willingly been prepared to assist other businesses in this economy. And I can promise you, we haven't received any help from government in this process, right?
And that's been a failure. I mean, that's been a fundamental failure. And it goes, I mean, this is going down a rabbit hole here, but I mean, it does illustrate in all clarity, if we've ever needed it, the importance of reliable, stable government and good governance, because the destruction of governance over the last decade in South Africa has left the country ill prepared for any crisis at all. And there's just been absolutely no capacity, leeway, ability to step into any sector with any great meaning, other than perhaps some social grants. And, you know, but to help and save industry, it's really been every business and every industry, every sector for itself.
I think to a large extent that is true. And I mean, certainly, you know, the real estate industry, we pragmatic in that we understand the relationships between ourselves and our clients, right? And I think that is the reason why we proactively, very, very early in March already, you know, came out with some relief. So we released the first package of guidelines on relief on the 6th of April. And that's within 2 weeks of lockdown, right? So that was moving pretty quickly. If you look at the scale of the industry, I mean, we contribute 5% to GDP. If you take the 2017-18 numbers. And I think what has worked is that if you understand that relationship, then that you are reliant on each other. So the retailers specifically are reliant on us, and we are very reliant on them. I think we have been able to do a deal where we either equally unhappy or equally happy, which is obviously the measure of a great deal. So I think that has worked. What has been difficult is the fact that, in a way, we've been holding up the dam wall between the financiers, the capital providers, and also the municipalities. And let me tell you, that is a topic that I'd like to touch on today, because
let's go there. Let's go to municipalities. I mean, if you've been squeezed between, as landlord, you've been the sort of the meat and the sandwich of recalcitrant tenants, and then a whole bunch of expenses that you've got, the fixed costs, the overheads that you've got, the rates and taxes, which in an ordinary month you possibly don't get a commensurate value for. Right now, there's absolutely no leeway from those guys, I would take it, in terms of the breaks you would like from them. So you're taking, but you're not being given in return.
Yeah. So internationally, rates and taxes and things are usually collected directly from businesses. So there would be a business tax in the UK as an example. And there they've also got the same problem. It's bizarrely high and unsustainable. So, you know, similarly, I think government in South Africa, local, municipal, and even provincial and national is becoming too expensive for the people, right? And that's where we've got big challenges as a country. I think when we look at the Municipal Rates Act, in other words, the way that municipal rates are collected, what we are finding is that over the past 8 years, well, since 2008, we've seen escalations in aggregate of 318% in a time when CPI was only 75%. So you can see substantial increases over inflation, and that continues to be the case. I mean, if I take Johannesburg's income, for the period 17-18, the income grew by 15.1%. For 18-19, it grew 35.8%, and 19-20, 21.7%. Now, let me tell you, over the past 5 years, in real terms, rentals have gone backwards. Now, the perception is because we as landlords are collecting this rental, that we're also collecting the rates and taxes on behalf of the municipalities. There is a perception that rental's gone mad, and that's not the case. In fact, what's gone mad is rates and taxes. And on top of that, what we are suffering as the industry is we picking up the burden of the shortfall in services as well. So if there's no water in Cape Town, okay, we go and spend a fortune of money as an industry to provide water for our clients because it's essential. The second thing is if there's no electricity, we're going to spend a fortune on panels, generators, all sorts of things. And all those costs are having to be absorbed or passed through to the client. And, you know, the latest is even more special. You know, when it comes to provincial roads, there's examples where we, in fact, as companies providing, for instance, the new Woodmead interchange, okay, with not one nickel coming from government, which is unacceptable.
But,
so that is the challenge that we face.
You get to a point, don't you? I mean, you get to a point where it actually becomes inefficient to operate. Your costs get too high. You've got to provide your own infrastructure. I mean, Stain City, which was a fabulous residential development and mixed-use development built in Johannesburg, only got the go-ahead because they built the highway to the front gate and beyond. And that's maybe the cost of doing business. That's all well and good. But when it's done in perpetuity as a result of government inefficiency, at some point you throw in the towel, or not.
Yeah, so, you know, the sad part is, Bruce, you know, we fit into the international economy, right, as South Africa. And if you want to be competitive and sell your goods and promote your country, you have to be as efficient and as tight with your costs as possible, because our country is a business. Each one of our businesses contribute to that business. And in fact, interestingly enough, the real estate sector actually as a sector is one of South Africa's most competitive sectors, or has been, certainly historically. Our rentals per square meter, you know, are small, absolutely minuscule compared to what you would pay in London or in New York or any of these places. So we've actually been able to attract international investment. We've also been able to attract international clients, you know, to our shores. Now, if your competitiveness is being eroded over time by inefficiency, that is disappointing. And we as a country cannot afford that because, look, you know, we have to create jobs, we have to create prosperity for this country. And the reality is everybody has to muck in and try and do this the right thing. So what we as an industry will be doing over the next couple of months is we're going to be having to talk to the Minister of Cooperative Governance, and we're going to have to try and start a discussion around how we can put a bit of a leash on this hyena that's totally out of control and effectively expropriating income without compensation.
I was wondering whether you were going to go there, and you did. Give me a sense of it then in terms of the investment industry, the financiers. You've had a few pokes in that direction. Just elaborate a little for me, please.
You're talking about specifically the potential changes in legislation, Bruce?
Yeah, go on.
Yeah. So look, I think, you know, realistically, if you look at the market and certainly the discussions with many investors and, you know, with all the stakeholders in our country, the prospect of commercial property being expropriated in what was originally proposed, we believe is very unlikely. I think as soon as you, because, you know, the definition of property does not stop with real estate, right? Any property. They can come expropriate your car, Bruce, which is not going to be too cool because it's bad to walk, right?
No, they're really welcome to my car. You haven't seen my car. My car needs to be expropriated. As a matter of fact, I might leave the key in it so it can be expropriated. I need an excuse. But anyway, sorry, it's another issue.
So these things are a challenge too, but, you know, there are obviously other alternatives. The reality is that, you know, that type of legislation will undermine investment in the country entirely. And certainly if you can look at, I mean, some of the news coming through the media at the moment where, just with what uncertainty does to investment. So we've seen certainly the brewers being quite vocal as to how they have withdrawn investment into fixed projects. I can tell you the first thing that the property industry did when we went into this little crisis is pretty much most of the big projects that we contemplated, we've pulled a handbrake up. And I can promise you the numbers will be much bigger than the numbers that those couple of brewers have mentioned. So the reality is that fixed capital formation is effectively investment into fixed real estate and into the investment in projects that cannot be moved off the continent, right, or off the soil. And the real estate industry has actually been a great investor into the country. Continuously every year our company has continue to invest into South Africa. And even though we've also been diversifying internationally, but if you erode that in any way, shape, or form from a legislative point of view, it will be a death knell to the South African economy.
I mean, property investors, a bit like miners, are the ultimate optimists. I mean, you have to be an optimist to dig a hole in the ground and then bury half a building in the ground and then build a little bit on top of it. Because you've got to be able to take a 20, 30-year view. And even throughout South Africa's worst crises of the past, I mean, when Donnie Gordon went into a piece of open felt on a farm in Sandton and said, we're going to put up this thing called Sandton City, and off he went, and people looked at him and said, but there are gravel roads everywhere. And like, no, it'll come. And suddenly we can't imagine Gauteng without Sandton City. We can't imagine the waterfront without the V&A, which is one of Growthpoint's properties, probably the most valuable real estate on the African continent. And that was done at a time of political transition in South Africa. Deep uncertainty at that time when Chris Hani was killed, and the V&A waterfront is mushrooming and growing and morphing, and since then has grown in leaps and bounds in different directions. And when I last checked, there were still expansion plans there as well. This crisis, however, is actually for the first time causing not only the handbrake to come up, but you were going at 100 k's an hour, you pull the handbrake up, and you've done a handbrake turn 180 degrees in the opposite direction.
Yeah, look, I mean, it's obviously difficult to destroy investment that's already been made if you talk in bricks and mortar terms. But I think the important thing to understand, Bruce, with regards to the industry, it is a service industry fundamentally, and it's supply and demand. So if there is demand, then there will be development. So, I mean, the reality is you can try and create demand. So the very entrepreneurial developers will create brand new cities and try and attract clients and people to come and live there and all these kind of things. And we have seen that. I mean, I think Dubai would be a wonderful example of that, right? Which is very, very kind of cutting edge in many respects. In the South African context, what we have seen is that development has slowed over the past 5 years, but there is still development going on. Why is it going on? Because there's demand. So if a blue chip corporate wants a brand new, efficient shopping center or office, then that's what we have to provide as the industry, and we incredibly efficient to mobilize capital to do so. So that comes back to the sophistication of the industry and its competitiveness. I think what is interesting is over this period, office we've seen over the past 5 years has been the weakest performing of the three sectors, because what we have seen is corporate South Africa shrinking, right? But over the COVID period, it was the best performing because corporate South Africa continued to pay their rent. So it is funny how these things...
longer? But for how much longer? Because when one looks at corporates and one looks at offices and one goes, well, nobody really goes to the office anymore and things have been working fine. And as long as there's broadband and connectivity, people don't want to sit in traffic. Not that there is much at the moment, but it could pick up again. Is there really a future in the traditional head office as we know it? Satellite offices, perhaps, trimmed down office spaces. I mean, is there not potentially a glut in our CBDs and in our new CBDs of office space into the future? Good point.
Look, there's significant oversupply as far as I'm concerned in all three, the sort of major sectors being retail, office and industrial. I think of the three sectors, the one that's probably over the past 5 years been the least impacted is industrial, and there's been decent demand for new industrial. And that's driven by logistics and, the growth in the fact that I think, South Africa is importing increasingly our goods rather than producing it locally. With regards to office, I mean, the honest answer is, Bruce, you have to have a crystal ball, and I actually don't know what the real answer is, whether offices will change fundamentally. But the information that we have as we sit here today is that not every occurrence is a long-term trend. And what's happening in COVID at the moment, people aren't going to the office because they don't want to. They're going there because they aren't allowed to, okay? So even Growthpoint, we've had a couple of cases. We've been fortunate, not too many people have got sick in our organization, but we've sort of insisted that anybody that can work from home must work from home. And then there are people that can't work from home, right? And those are being accommodated in the offices on a rotational basis. So very, very high, focus on our employee health. And I think that is true for every corporate in South Africa. Now, will that be the long-term trend? We reasonably confident that we believe that our scientists will come up with a clever mooty to fix this thing. And, if you look at the South African statistics, if they're to be believed, we're a bunch of toughies here in the bottom of South Africa, right? And we don't die easily. So, that has also helped a little bit. We do think that more flexibility in office going forward will be a trend. And that potentially could have a bit of a negative impact. In the short term, what is having a positive impact is social distancing. So corporates are required to nearly take additional space. They're looking to diversify their office space. I've got a family member running one of the banking call centers. Now, they've split their operations over 3 buildings, and within the buildings over different floors. And even then they're still having problems because the people working in those centers tend to socialize in the parking lot or something, and so it gives you an idea of some of the dynamic, and we've actually seen some good demand coming from this kind of dynamic. I think coming back, once again, the real estate industry is a service industry. And I think if you provide a really good service and you meet the needs of the client, you will prosper. And if you're a big corporate, you can't train people. You can't build a corporate culture. You can't have strategic processes. You can't, if you've got an apprentice working for you, okay, or working with you to learn how to do whatever you're doing. It's very difficult in this kind of environment to do it when you're sitting in your house and he's sitting in his. And you must remember, in South Africa, we've got quite a few special sort of scenarios. We've got a large component of our population that don't want to stay at home because it's not really conducive. Secondly, they don't have the IT infrastructure that's generally required for working from home. And then, of course, we've got the old winner. Eskom certainly will help the office sector because if we switch off the power...
Don't say that word, because the moment you do...
Well, the reality is if you switch off the power, nobody at home can work. So they come to the offices where we've got uninterrupted power,
Give me a sense of it. You talked about the mooty to fix the virus. What's the mooty going to be to fix the property sector?
So I think the first thing that I believe is a very, very good suggestion and should have been implemented many years ago is to split Eskom up into the 3 different components: generation, transmission, and distribution. I'll give you an example. Growthpoint today, we've built more than 11 megs of solar power on our rooftops, which is very efficient. We supply it straight into our buildings. If we could bring on capacity as a company, for instance, and there are other companies that are looking to provide that capacity as well, we would be a natural taker for some of that capacity. And the private sector could mobilize capital. I mean, we're very comfortable as Growthpoint knowing how much electricity our clients use to be able to produce some of that for us for our own company and for our own clients' use. So the problem is we're being blocked because there's transmission and there's distribution, and we can't wield through this network at this stage. I think if you split up the industry, if you just split off generation and privatize some of that, or give access so that you can do wielding agreements, I think the electricity crisis will be wiped out within 2 years, to be honest.
And Eskom doesn't want that because they want you dependent on them. The mooty question was really a mooty for the property sector. What mooty, if there was a pill that could be created to help fix the property sector, is that pill growth? Because that seemed to be like the only option really available to fix many of our ills.
Yeah, I think, unfortunately, let's say these short-term impacts of whether it's online shopping or the COVID virus or the changes in maybe potential use of office or even industrial property, I think are minuscule to the impact of the economy. And unfortunately, we have seen in real terms corporate South Africa shrink over the past 5 years, and that has had a material impact on the industry. So if your people are losing their jobs, they don't shop. If the people are losing their jobs, the offices aren't as well occupied. And unfortunately, growth is the only solution to many of South Africa's problems. And we have to focus on that as a country, as a collective. And there's ways of encouraging growth. And it certainly isn't a stranglehold on the economy and a very heavy hand from government.
And that heavy hand, heavy hand of municipalities. I've even heard some people suggest that government's actually quite scared of municipalities and is frightened to rein them in. They're almost a law unto themselves. And,
I share that view.
You would share that view. Okay, so that's the relation. There's so many dynamics and relationships in South Africa that are dysfunctional, that need urgent repair. And we can't be repairing them one at a time. We have to be repairing these things concurrently.
Yes. So I think, there's a lot of things that that the private sector can assist with. And there's no doubt that we can't work in a silo separate from our government. So unfortunately, increasingly, we're going to have to engage government and work with the people to build trust, because I do think that, over the years, there has been a level of distrust building up. And, there's always 3 sides to every story, right? And I think the reality is from a private sector point of view, there's good skill sets within the private sector, and it's got the ability to develop things efficiently at the right cost. We had a 3 billion rand project, right, that we brought in. Guess what? 2.9 billion, right? Very easy. I haven't heard any of those government projects come in like that lately, right? So we have the ability in this country. We've got incredibly clever people in this country. We've got capacity, which is underutilized. So there's a bit of a capacity mismatch. And we should be using our capacity in this country and the smartest people to do the things that need to be done. And for an efficient country, you need a meritocracy. So in other words, we need to pick the best people to do the job. You need to be pragmatic. So, there's this little example where it doesn't matter if the cat's black or the cat's white. If it catches the mouse, it's a good cat, right? So there has to be a pragmatism. So it doesn't matter what sort of political reference you come from. If the thing works, implement it. And then the last component, I think, which is absolutely essential, is this most difficult one: honesty, okay? And there has to be consequences. So if people are stealing money, or if they're not doing what they're supposed to be doing, there must be consequences. And those principles can be implemented very simply in this country, but it's going to be very difficult to implement.
Estienne de Klerk, thank you very much indeed, Chief Executive at Growthpoint Properties and also Chairman of the South African REIT Association. Greg Hopkins, it is your turn to wrap up with us this morning. Thank you very much.
Thank you very much, Bruce, and thank you very much, Estienne. And, it's really refreshing, listening to Estienne. I agree with him in terms of the points around the private sector. And when we have the strong corporate leadership that we saw in today's webinar from Estienne at the helm of the high quality companies that we have in the South African private sector, and Growthpoint is one of them. We believe that there are, solutions for the very significant problems that our country is facing at the moment. What we did learn today is that we are facing an environment that's going to be very difficult to navigate. There's significant uncertainty, and uncertainty brings emotion, and emotions are running high at the moment. And it's in times like this that we all need a good financial plan and we all need very good financial advice. Talk to your financial advisor, particularly about the role that property can actually play in your portfolio in the future. And if you don't have a financial advisor, get in touch with PSG via this events registration platform. We welcome your feedback. Please communicate with us. Please also join us in our future Think Big Series webinars, when we'll be talking to other thought leaders like Estienne. For example, the hard-hitting journalist Richard Poplak will be talking to Bruce about the future of media, freedom of speech, and the sordid underbelly of Bill Pottinger. Bruce, I know you're going to enjoy that one. Thank you for your time and your participation, and we look forward to seeing you again in the future. Bye for now.